How do the banks invest their money? Video 2 of 4 of this banking series. My name is Thomasian, and I offer in the wealth modules the financial education not shared anywhere in this video. I'll break down how the banks invest money. Please watch How Banks Work YouTube video if you haven't yet, as it's the first video in this series, also linked here below. So the question that comes up, wait, Ben, how do banks invest money? Even a licensed banker wasn't able to speak to their high-earning and high-balance customers about the investments the bank puts in their cash into. It was all about the assets under management. I challenge you to go to the bank, to your banker, and ask them, hey, where do the banks invest? You'll hear crickets. Banks invest in accounts the average Joe and Jane like you and I can invest into as well. But you need to talk to a licensed financial professional like myself to learn about those options. Read the book Money, Wealth, Life, and Life Insurance by Jake Thompson for more information on this subject if you like doing your own research. Reach out to me and I'm happy to share this material as well. Banks also invest in real estate. They own the offices they work out of. JP Morgan Chase, for a real-world example, owns $343 million in real estate holdings. But they also have $11.3 billion in accounts that are backed by life insurance to take advantage of the IRS tax codes that saves them from having to pay on those fantastic and guaranteed safe earnings on those investments. You can look up this information on FDIC.gov website as well. So when are the banks going to die? Well, they never will. So why do they invest the lion's shares of all their cash, of their coffers, into life insurance-backed policies? Some things are easier to show with examples, and if you set up time with me, I'm happy to explore these options for you as well and provide additional valuable knowledge on the subject. Banks, when it comes to investing their own money, do not follow conventional wisdom and put their cash into mutual funds, stocks, hedge funds, term life insurance, or risky real estate deals. No, they don't. Instead, they place a large portion of their vital resources into high cash value life insurance or permanent insurance. Banks invest billions into high cash value life insurance. Surprisingly, for many banks, life insurance is their largest asset class. For it to qualify as an asset, they have to be able to withdraw it if they need to do so. So it's called keeping it liquid. And by the way, if you ask a banker what they are invested in, they would lose their job if they didn't toe the company line and maintain the script and sell only the products that the bank offers. Tellers and bankers don't need a license to sell credit and put Americans in debt. So what does a wealth management department at the bank offer to their high cash flow earners when you meet with a broker licensed and working for the bank? What do the 1 or 2 clients out of the 100 who walk through the door get offered because they qualify? Well, first, what does it take to qualify? 1 million or above to qualify is what you need to have as a main focus on investing and saving. You would then be talking with bankers who are licensed. Not a single banker in this department can offer these options in this private and exclusive section of the bank. The other 95% of the clients haven't heard of this, and there's no exceptions for them to meet with this department. So what are the different types of advisors do the bank have? Well, they have 2. The typical financial advisor has a Series 7 and 66 license and is trained on passive management of assets. What does that mean, passive management of assets? Well, it means they can pass off the management of your assets to someone else for a 1% fee, and it will get invested and focused 100% into various mutual funds. The accounts are transactional, which means anytime there's a trade, buy or sell transaction, it triggers another commission for the bank. The other type is an investment advisor and is structured not as a transaction, but instead works on a fee-based commission, and these folks are required to carry a Series 65 license. They have higher requirements or qualifications to make an appointment with, to be a part of their department, and so it's a little cheaper because it's based on the size of the portfolio and not on each transaction. They are also a little more active in managing the money for their clients and will not pass it off. But these guys are working out of the larger firms like Merrill Lynch and Edward Jones if the client meets higher qualifications. feel free to comment below or send me a message from the healthwealthandrealestate.com website on the Get in Touch link at the top of the webpage. And please like and subscribe to the channel so that you don't miss any future educational videos. I hope you found this informative and look forward to chatting in depth about it with you. Look for video 3 of this series and have a wonderful day.